All right, everything looking good on my end. Let's go ahead and get this stream started. Welcome back to the channel, Crypto Trend Trader, with our midweek market update. It is September 1st, 2021, 8 p.m. Eastern Standard Time. And before we get started, I would like to remind you this is not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. Also, we're going to talk about some other things today, including some IRA related material and whatnot. So, for the record, uh, talk to a CPA or a tax attorney or whatever you need to do. This is not tax advice either. But I want to talk about compounding interest, the rule of 72, difference between an IRA and a Roth IRA, and then also how the breadth of the market is starting to thin. And I'm sure you probably or most definitely have noticed by now, but my allergies are absolutely killing me. So I have lost like 50% of the ability to breathe. So bear with me. I don't know how long this stream is going to last or how obnoxious it's going to be to listen to me like underwater, aka with a completely stuffed up nose. So hopefully it's not too bad and I can still get across the important information I want to talk about today. So, but we will jump into, we'll start at the beginning where we always do with the 10-year and DXY. And then we'll jump over into crypto and then commodities, and we'll talk about the IRA information, etc. And then we'll just see where I'm at from there. So, but new month, so hopefully, well, we're already off to an amazing start, as we obviously got some crazy crypto volatility and some nice positions, as well as quite a few of the positions we talked about as recently as our last stream on Sunday, exploding to the upside anywhere from like 5 to 30%. So we are off to a, well, good end to August and great start to September. And, I'm already happy with how this year has went. I'm sure most of you are as well. But, not ready to write off the last couple of months because it looks like we could easily have a bunch more gains to be had. So here looking at the 10-year, we are basically, still at that decision point. We had talked about essentially what we're paying attention to is where our next low comes in. So we obviously have, basically a low down here and then, series of potentially lower lows, higher lows, I'm sorry. And then we'd be moving to the upside. But in all reality, we're just consolidating right at the 200 exponential and simple moving average. We've already crossed the 8 and 21 back to the upside. So we just need to see, are we going to just burst back up to the 618 and then start moving up here? Or are we going to lose this area and just get pushed down? So, at this point in time, not a lot of conclusions have been made or anything. The stochastics are starting to roll over back to the downside, getting ready to have, well, they already crossed the downside, and now the blue is starting to creep back up, trying to cross back to the upside. Meanwhile, we are above the zero line. We have a bunch of green histograms in a row on the daily, and we obviously have blue slope line here. So momentum is in the favor of a burst up to the 618. But again, we got to just see what happens over time. If we switch out real quick to the weekly, we'll see we're below the 8 and 21, and we bounced off of the 200 exponential and 200 simple, slightly above that. And we're basically just operating below them for now. But we do have two green histograms. We have left the bearish control zone, and we have a hard buy signal. So that tells us on the weekly that we're actually picking up momentum, but we are below the blue slope line here. So overall, that's telling us that we're at least in a midterm downtrend on the treasury yields. And then finally on the monthly, we are obviously in a 30 plus year downtrend. And then inside that downtrend, we have started in at least a temporary uptrend. Bunch of green histograms in a row. We're now above the slope line. We're about at the zero line. So we've already got, multiple green histograms in a row. We cross above the slope line, and that's our first two of three. So if we stay above this red line long enough, it's going to flip over blue, and we're going to start really picking up momentum to the upside. And we can see the last time that happened, we had a powerful move, came back down, retested the lows, and then had an even more powerful move after that. And that period of time when it flipped over blue was from 2013 until it flipped back red to 2019. So we're talking about a potential of, Last time before that was January 2005 until December 2007. So, we're talking about like 2 to 5+ years of uptrend from the middle of the range. So that could easily take us to the top of the range, close to like 2.5% interest rate on the 10-year Treasury note. We also have the hard buy signal leaving the bearish control zone, and we're up here at the top of the neutral zone or about to enter into potentially the bullish control zone. So overall, monthly, monthly looks fairly strong. Weekly could go either way, but looks decent, at least for a short-term pop. And then daily, again, technically momentum to the upside, but could go either way. TLT is basically just giving us the opposite. We're still potentially filling out this head and shoulders pattern. We are above the 200 exponential and it has rolled over to the upside, but 200 simple still has a negative slope. We have lost the slope on the TJD TDMACD, and we're starting to like lose momentum to the upside or gain momentum to the downside on the daily. And then again, if we switch over to the weekly, we'll see we have bounced off the 200 exponential and simple almost perfectly. Came up here, flipped the 821 back to the upside, but now we're leaving the bullish control zone, about to get the hard sell signal on the weekly. We're above the slope line right here on the weekly, but we are seeing red histograms now show up. So while the slope is blue, and we could potentially gain momentum to the upside, since this is a weekly chart, we could easily have multiple weeks or even months of downside and still maintain this trend before we push higher. So then finally, the monthly, we are attempting to cross back to the upside, the 821 right here at the 382. We could easily get a pop up to the 0.5 and fulfill this Fibonacci retracement level from the top to the bottom, 50% retracement. We are well below the blue slope line. We do have a couple green histograms in a row, but we know that overall this is a bearish trend, or that, essentially the trend or the momentum is to the downside. So VIX next. VIX is down here at 16, retesting our lows going back to April of 2021. We basically have just been hanging out at this level. Every push up has been immediately, pushed back down. And all of these pushes up have corresponded with a dump in the stock market as well. So, we're back at the area where one time we had a push up here, second time here, third time here, fourth time here. So we're right down back in that same area again. So we've got a little leeway to the downside, but more likely than not, we're going to see a push back up to like 21 or so on the VIX the very near future, as that's literally what's been happening over and over again. But I do not expect any kind of break from this range, but we are at the bottom of the range. So more likely than not, we're going to get a little push up here in the near future. Let's look at oil while we're at it. Oil got that bounce perfectly. This is a perfect example why I use the 200 exponential and 200 simple. Let's just look at this chart really quick. It's easy to just use one or the other. But if you were using just the 200 simple moving average, you would have missed this entry right here. You would have missed that. You can't even tell what you're bouncing off of. You could say, oh, it bounced off that same low from right here. But if you have both those things in play, that low and then also our moving average, it's literally the perfect touch of it. So while Wall Street typically uses 200 simple moving average as their main moving average for trend, 200 exponential is just as good and valuable, and also, in my opinion, works better with crypto and more volatile assets. So, in my opinion, you should always be using the 200 exponential and simple. And then, obviously, the slope of them is important as well. So, we still have momentum to the upside, but we're very close to that 200 exponential and 200 simple crossing. So, if we just go sideways and don't get a powerful move to the upside, the 200 simple is going to cross above the 200 exponential. And then we're actually going to see, this is going to look like to me, we're losing trend. We're losing strength to the upside. So at the bottom of a trend, where we're starting to lose strength to the downside and potentially rolling over, we'll see that the 200 simple will cross under the 200 exponential, and then the 200 exponential will usually flip over first. And then at the top of the trend, we'll see the 200 simple will lag and cross above the 200 exponential, and then we'll start to roll back over. So typically this corresponds with like the end of a trend. It is possible to save the trend and continue to the upside. But right now, it looks like oil's running out of steam. We could very easily cross this back to the upside, start moving powerfully, and the 200 exponential bounces off the 200 simple. And next thing you know, oil's at $80 or $100. Very possible. We're in the bullish control zone. We have only green histograms. We're about to cross over the 0 line and the slope line. And we just bounced the 200 exponential. So, still bullish on oil, at least for the short to medium term. So, yeah, let's just run through our index real quick. Dow Jones had its third consecutive down day. It's not crazy, but if you look back at, the chart here, how many times have we had that recently? We had 3 down days back in January, followed by a nice sell-off. We had 2 here. We had 2 here. We had 3 here, and that was like a couple percent move. We had a bunch in a row right here, and now here we have 3 in a row. So is this going to be the break of the trend? It's possible. I wouldn't say very likely. I still favor continuation to the upside, especially after we broke through this green support, which was resistance. If anything, though, what I'm paying attention to is, do we break down below this blue slope line, and do we come down below the green support line? S&P, obviously the wedge is just tightening. We have made it back inside the wedge, but 2 down days in a row now. Again, we're running out of room on this thing. I would expect another pushback down to the downside, get bought back up, and then potentially a break to the upside. But again, we're at extremely high elevated levels. I do still expect this to get up slightly higher. I mean, you guys have known forever my target has been 4,600 or 460. So we're almost there. We're at the top of the range, in my opinion, and very likely going to see a pullback sometime in the near future. But is it going to be tomorrow? Probably not. IXIC and NASDAQ still in our move to the upside. We saved the trend. Got the green histograms back above the blue slope line, still inside the bullish control zone. The better part of the measured move of our breakout has already occurred. We had an ascending triangle. We used the measured move from the bottom of our triangle, or the meat of the triangle, to the top of the triangle to project out our target to the upside. We have made it the better part of the way to that target. Still a little ways to go. It will be an 18% move from our retest back here, or from our breakout. We're about 9% or so of the way up there. Not a great looking candle. We basically gapped up, started moving to the upside, then sold back off. Still a record high close. So it's not bad by any means, but not what you want to see. Obviously, you want to see like strength and continuation. But we noticed that obviously the breadth of the market is getting smaller and smaller. Only certain things are moving on certain days. The whole market is not moving together. Big stuff is pulling up the little stuff. Little stuff will have a push up, and then back to the big stuff, etc. So, we know this market is starting to lose some steam. We did see the Russell actually moving to the upside, like expected, 100%. We bounced perfectly off of the bottom of the range. We spoke specifically about the 200 simple and 200 exponential and the bottom of the range acting as an extremely, extremely, extremely powerful support zone. As typically the first time you touch a 200 exponential or simple, you're going to bounce that. And then also every touch we've had along the way over the last year has bounced the bottom of the channel perfectly. So likelihood was that we're going to bounce back up at least to the heart line, which we did. We're now above the heart line. Looks like we're headed back up to the top. Again, we have been operating inside this channel since basically all year, since January. So more likely than not, we're just going to continue bouncing inside the channel. So if we do get back up to the top, we're probably just going to come back to the middle or potentially the bottom. Overall, though, saw a nice little cyclical rotation back into the, I almost said shit coins, but small caps, aka the shit coins of the stock market. Let's do the sectors real quick. XLB, materials, still weak. Hit our measured move, though, for the second time. Trying to move up here. Overall, looks decent, but still decent ways off of its all-time high. If it continues, though, with strength, we could easily see materials at all-time highs again very soon. XLC, communication, all-time highs, looks great. XLY, consumer discretionary, basically all-time highs, looks great as long as we're above that 180 mark, which is our clear resistance turn support. XLE, energy, still looks terrible, especially in comparison to everything else that's making all-time highs. We are down here at the 200 exponential and simple. The slope is flipping over on the 200 exponential, and 200 simple is going to lag behind, but it's about to cross up over the exponential. And as we talked about just a couple minutes ago, that's typically what we see at the end of the trend. So here we see the purple crosses below the red. That's our 200 simple crossing below the 200 exponential, and then we roll back to the upside for at least some amount of time. In this case, the whole year so far. 8 months plus. Here we see the opposite happening. 200 is going to cross above the 200 exponential. So it looks like we are topping out, potentially getting ready to retrace on this. So it looks like energy is very weak. We also have the 8 and 21 angle to the downside. We are, however, seeing some slight bullish divergence here between some of our indicator oscillators. We have a low here, a higher low here. We have a low here, a higher low here, a low here, and then a lower low here. So it is possible we get at least some kind of like little pushback to the upside. Maybe corresponds with oil getting a nice little move up. Maybe not. Maybe we push back down again and we get a third drive of bullish divergence and then we get a move. But typically, when bullish divergence plays out in an uptrend, it's going to be a decent move. But we'll have to wait and see, obviously, how that works out. Energy underperforming, clearly. XLF financial still looks decent. Bouncing the 21 for now. Still in a decent trend to the upside, but we are seeing some bearish divergence starting to develop here. So financial sector, is it topping out potentially? We still have plenty of support below us at like 36 or 34. We could easily bounce to 21 and keep moving to the upside though. We do have quite a bit of support back here as well at the previous all-time high. So we'll have to wait and see how that goes, but we are seeing some bearish divergence developing. Looks like the stochastics are basically getting rejected. Blue off of the purple. Corresponding with our 2 drives, of bearish divergence. So this could easily break down from here. Maybe it pushes up to a new all-time high, and then we get a third drive. That's much more reliable, exponentially more reliable in my opinion. 3 drives versus 2. So XLI, industrial sector has just been going sideways, basically while the indicator oscillators cooled off. So in my opinion, this is a bullish reset. We're still above the 8 and 21. We're still well above 200 exponential and simple. We have a blue slope line now. So, this thing getting ready to potentially burst to the upside. Easily could have another 20% move to the upside. But when we zoom out on the big picture, it's important that we pay attention that, our top projected for this 10-year channel and then also our CVD channel, which was going on for almost 2 years now, is right here up here at 120. So while we could have another 15 to 20% upside, we are very close to like peaking out inside of these 2 patterns, which tells me we're probably going to be coming back down to at least the heart line or the bottom. So, definitely not a good entry at this point in time, but still some upside potential, in my opinion. Obviously not financial advice. XLK Tech, new all-time highs. Obviously, NASDAQ is moving up right here, so I would expect this technology sector to continue going up here. Same with communication, obviously. XLP, consumer staples, up here retesting our previous all-time high, rather. Still looks decent. Our expected move is either the 1.618 at 73.65 or 74. Maybe it doesn't get there, but overall it looks pretty good. So XLRE real estate, new all-time highs. Obviously got that nice entry back here at 46, showing some definite strength right here. Initial target 1.382 at 51. After that 1.5 at 54, and then 1.618 at 57.87. We are starting to see some numbers coming back that real estate may be, getting tired. This is obviously just strengthening and looks like it's about to go parabolic. Will that be the bull off top? Potentially, but we won't know until we get there, obviously. XTN, transportation, seeing that bounce off 200 exponential and simple. We'll see the 200 simple has crossed above the 200 exponential. That tells us that this is weakening. While we did cross the 821 back to the upside, we have blue slope line on the TJD, TDMACD. We are inside the bullish control zone. It's going to be difficult for us to get above this previous high right here. It is possible we come up, poke above it, and then break down from here. We'll have to see. Typically, we want to see a powerful move off the 200 exponential and simple, and we know that fundamentally and technically transportation sector is weakening. Jets looks terrible. We have crossed the 200 exponential back down to the downside. We're still below both 200 moving averages. 200 simple looks like it's about to roll over. We did get some bullish divergence developing down here. We did roll over the slope line blue, but I would expect this to underperform. It does look like it wants to have a little push to the upside though. But we just saw a bunch of, airplane flight data and everything, and it all looks extremely horrible. And these airlines operate on very tight margins. So, not having as many flights or not having the flights completely full can completely wreck their business model. So get ready for a bailout. Another bailout, I should say. Like the third or fourth one for the airlines in the last 2 years. So might as well just start letting them go under at this point. Hail, rental cars and whatnot, same thing, still looks weak. Not quite as weak maybe, but still weak. Bullish divergence, so could we easily get a push up to 59? I think we can, yeah. UPS, retesting what amounts to a W pattern right here. Did not make it down to our target, but looks like it wants to shoot back up here. So could we see this back at 210 very soon? Looks like it wants to. It's getting ready to cross the 821 back to the upside. Has a clear gap left in price action. Looks like a 15% move is very likely. We do see, obviously, green histograms above the blue slope line, and obviously everything else pushing. Looks like it wants to move to the upside. We see the opposite on FedEx. FedEx looks very weak. We are inside the bearish control zone. We're seeing a little bit of green histograms here, but we are now below the 200 exponential and simple. Both have rolled over to the downside. And obviously, when we zoom out to our big pattern, looks like we have topped out once again at the top of the megaphone pattern. And now we want to break down at least to retest like 240, if not like 180, or potentially way, way, way down here to the 100s. Oh, man. Boy, I wish I could breathe. Give me just a second. I'm going to try to clear my throat a little bit. It's like they say, you don't know what you got till it's gone. So I'm definitely missing my ability to breathe. DXY on the daily, we are well above, well, we are above the 200 exponential and 200 simple. They are now both sloped to the upside for the first time since back in May of 2020, telling us that we have entered into a bull trend. We have a very clear W bottoming pattern or inverted head and shoulders, depending on how you're looking at it. We have retested that level multiple times, and we are just chewing through these sell orders, basically. We're seeing a little bit of weakness on the daily. We are rolling over the slope line right here and got rejected perfectly off the blue slope line, which is what we would expect and specifically talked about, especially while we were putting in multiple drives of bearish divergence. We see here a high. We see here a lower high. We see here a high, here a lower high, and then obviously through this range right here, series of highs, and then here a much higher high. So we have bearish divergence. Looks like it's trying to play out right now. How low will that take us? We'll have to wait and see. But overall, still looks bullish. We obviously broke down also from our very clear support line along the way. So I would potentially expect a measured move of the ascending wedge to take us back down to either the 200 exponential or potentially as low as the 200 simple. So again, I do expect some weakness in the dollar. This is going to help out, assets, including tech, especially as it is very volatile, and the dollar and gold have been very closely tied together as well. So, but we do have some clear bottoming patterns. We have some clear signs of strength as we have, put in some divergence along the way and are well above our, we're above our 200 exponential and simple moving averages. So still bullish on the dollar, but short term could see some downside for sure. Here on the weekly, we'll see we have 3 drives of bullish divergence. Obviously got a bounce off a key support level. Got a nice little move back up, retesting the heart line of either our inverted head and shoulders or our Adam and Eve double bottom right here. Got rejected at resistance right here, but again, looks like we're just chewing through the orders. 8 and 21 are crossed to the upside, although we are threatening right now. But you'll see we do have a series of higher highs on the TJD, TDMACD that are well above the slope line. We are seeing some red here, but we're still inside the bullish control zone, and we still have a clear blue slope line. Looks like we're just running into resistance at our 200 exponential and simple. But I do eventually expect a retest of them, at which point in time we'll have to wait and see do they break or not. I think they likely will. Then when we look at the monthly, this is what really has me bullish, is for the first time in this chart's history, going back to 1985, we see that the 200 exponential and simple are now both blue. The 200 exponential rolled over, and we found support at it here and then here again. And the 200 simple has rolled over blue now. We are above both the 200 exponential and simple, and we are now above the 8. We have the 21 slightly above our head here. We have left the bearish control zone. We have a hard buy signal on the Jewel Thief. We have multiple months of green histograms in a row and are sloped to the upside. We still have a red slope line. We're still below the 0 line. But this looks very clear to me like we're getting ready to cross the 821 back to the upside, leave the bearish control zone, and then obviously flip this slope back over and start moving up. That will most likely result in a move similar to something like this, where the dollar gains an immense amount of strength somewhere in like the 15 to 20% range. If we notice, like, you know, depending where you look at the 200 exponential or simple, is probably somewhere around here. If we had a chart, had it on the chart, that would be about a 25% move to the upside. So from the 92 level, that would probably take us up somewhere around like the 120, which would correspond obviously with our potential top target up here of like 110 or so, which is essentially just the top of our channel that we've been operating inside of for an extremely long amount of time. And if we look at that channel in the big spectrum, you know, that basically looks like a very clear resistance, support, down here, resistance at the top, support down here. So we would expect extreme resistance at the top. If we broke through that, we would expect a very powerful move to the upside, and probably the whole world is coming to an end if the dollar starts going parabolic. That is not a good thing, in my opinion, like on the macro. So, okay, so let's just keep rolling here real quick. I'm going to keep it kind of short, I think. But Tesla is still looking good. Looking at that 780 level as key resistance. Uber looking like it got rejected at this level. Still expected to come down and looking for an entry around $35. Pinterest getting a nice little push up right here to our entry for another scalp back to the top of the range. 25% target to the upside, about 8 or so to the downside. Looking at like a 3-to-1 risk reward ratio. Looks like it's having some trouble here at the 821, but we did leave the bullish bearish control zone. Got the hard buy signal. Bunch of green histograms. Looks like it wants to push back up and retest at least 63, if not 70. But I do expect it to get rejected, so that would definitely be just a scalp trade. Wish got a nice move off the bottom here and off our 2.618 Fibonacci extension target that we had predicted way ahead of time back in this range. So we got a perfect test off the bottom. We got a beautiful entry back here at $7, and I do expect a move up to the $9 range where I do expect it to fail, but 31% to the upside. Obviously already got the majority of that move up to the 21 and 2.236 where it did get a slight rejection. We'll have to wait and see how price action develops. But I do expect this back up to here like $9.11. We are leaving the bearish control zone, getting a hard buy signal and a bunch of green histograms in a row. We are above the 8, finding resistance at the 21. If these cross back to the upside, we could easily see that 31% move play out. You know, this is not something we've been in for months. We were waiting for that perfect entry, and we've been in it literally for days. And we're already seeing these trades just explode one after another. Airbnb. A nice little entry right here for 15% to the upside, 4.29% stop loss, 3.4-to-1 risk reward ratio off the 618. We're above the 8, we're above the 21. Hard buy signal, creeping up towards the bullish control zone, well above the blue slope line, and seeing green histograms here. We did get the initial rejection off the 0.5, found support so far at the 618 and the 8 moving average right here. So it looks like it really wants to creep up here to the top of the range, which is at 175 mark. And fulfill our trade setup. But again, these are scalp trades, not looking to invest, quote unquote, in these things for the next 10 years. As I do expect a big retracement in the market at some point in time. But in the meantime, I'm just going to keep taking that money for free on the easy trades. Vodafone still looks weak. I mean, sell by sell. This thing looks terrible. I really think it's just going to come back down and retest this line here. We have a potential trade setup in play right here. I did not take this trade setup. I'm really not interested in this. The chart looks terrible on weekly and monthly time frame. Bumble shot back up off the bottom of the range right here. Found some support. Looks good. I mean, it moved almost all the way back up to the 57 range. It's going to have trouble getting through this area. If it does, it sustains on top of it. I might re-enter in this for a long trade. We're up inside the bullish control zone. We reclaim the blue slope. Bunch of green histograms, but at a very strong resistance. Yeah. Just too much indecision with a lot of these ones. Too much selling pressure overhead. I'd rather just take the easy trade. So Baidu, we're paying attention to this. Definitely have like some resistance right here. We did get up to it here. Nice little buy off of the 618. And while I still think these China stocks have potential downside, this scalp looks like it wants to play out. we're crossing the blue slope line back to the upside. Hard buy signal coming out of the bearish control zone off of the 618. Looks like we're getting ready to cross the 821 back to the upside. Initial target is 182, the 200 simple, exponential, or the simple at 205. But very clearly we see same thing like we were talking about before. 200 simple is above 200 exponential, and they're rolling over. So while I do expect a pushback to the upside to retest these of 15, 20%, this chart still looks absolutely horrendous on longer time frames. We are below the monthly 8 and 21, and they look like they're getting ready to cross the downside. So even if we come back up and retest them, we have to be very careful that we don't see a dump like this, where this thing loses literally like another 50% of its value. We have a hard sell signal. We have, excuse me, sorry, all red histograms. So while we're still above the slope line and it is blue, this chart looks absolutely horrendous. We're looking at this as like a scalp potential. This looks to me like on the weekly, it's just coming back up to retest the 200 exponential and simple. We're still below the 8 and 21. They're crossed to the downside. We're seeing a buy, a sell in the bearish control zone. So while I would potentially expect a buy signal to come out of this right here, it looks to me like it's going to underperform, but could be our divergence signal at the bottom of the range. Could turn from a scalp into a positional trade. But I still just think with the macro in China right now, economy slowing down, regulations, uncertainty, there's just a lot of safer, better places that we could be putting our money. Even after this big drawdown right here, we have basically wiped out price action all the way back to the peak of June 2011, or you say you don't want to count that, October of 2013. So this stock has essentially wiped out, 2011 and 2013. So somewhere between like 8 and 10 years worth of gains. Not a place that I necessarily want to be, especially with like a bunch of overhead regulation and, the way this chart's looking right now. So while I do expect some more continuation to the upside on these oversold China stocks, I'm not ready to call a bottom on these on the macro yet. BABA bouncing off perfectly our 786 and buy zone right here. Absolutely phenomenal. Again, still looking very weak. Bunch of green histograms coming out of the bearish control zone. So we are getting a hard buy signal. We are above the 8, finding resistance at the 21. We could easily see a pretty decent scalp move all the way back up to retest these 200s. Maybe a 25% move back to like 217. But we have a very clear slope line, 200 exponential to the downside, 200 simple to the downside. And this is a perfect example of what I'm talking about. Once that 200 simple crosses above the 200 exponential, look how they just roll over, and then we start into a powerful downtrend. That is what I never, ever, ever want to be involved in something when it shows me this pattern right here. Because this is telling me there's a very high likelihood this is topping out and getting ready to get absolutely crushed. So if we just look at where that 200 exponential crossed over the 200 simple, this went down another 40%. So how many charts have we seen where we're losing momentum like that are potentially looking at a 40% plus move to the downside? Quite a few. Quite a few. And then when we zoom out and look at the weekly, again, we have broken below the 200 exponential and simple, and we now have confirmed the 200 simple and the 200 exponential have confirmed downside. So they're both sloped to the downside. We're well below them. I did say this is potentially looking like a bottoming pattern for right now, but, do you really want to catch a falling knife on something like this? We're at some decent support through here. A bunch of red histograms inside the bearish control zone. I'm not seeing any strength yet aside from a candle. And again, we have lost the slope line, below the zero line, all red histograms on the monthly, hard sell signal, about to enter into the bearish control zone. So while we are trying to find some support through this chop, again, how much price action have we wiped out? We initially entered this range back in August of 2017. So, we have wiped out literally like 4 years worth of gains on this thing and could easily have further downside potential. I am still bullish on this long term, but right now, just not the place I want to be for anything but scalps. 10 cent. Again, nice little move to the upside, crossing 821 back over. Could easily see that move play out to 553 or as high as 593. But again, I'm looking at this as a scalp. We have flipped over the slope line in blue. We did see some bullish divergence playing out, and now we're getting to reap the rewards of that. Bouncing perfectly the weekly 200 exponential and simple, and the 0.5 and the previous top back here. We do see 2 weeks now of green histograms. We are exiting the bearish control zone, potentially about to get the hard buy signal for a buy, sell, buy, divergence signal at the bottom of the range. So definitely seeing some strength here for that potential pushback to the upside on the weekly. And then on the monthly, this looks dangerous. We are basically getting ready to cross the 821 to the downside. Now, every other time Tencent has tried to do that here, we averted it. 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 So more than likely what's going to happen right now, we're going to avert this cross based on history, based on technicals, based on what's been happening. But in the event that this does break down and 821 cross the downside on the monthly, that is entering into a long-term downtrend for the first time literally in history. And this thing started its run at 60 cents back in 2004. So if this is going to be the top, I don't want to be involved in it. So when I look at this as downside potential versus upside potential, there's the risk reward on this is absolutely horrendous. Because even if we come down and retest the 200 exponential or simple for the first time ever, you're talking about like $165 range. I don't think we're going to get there. But, you know, the last time this happened, we left the bullish control zone, hard sell signal. This thing went sideways to down for literally months after months after months. So even if it just goes sideways from the top to when it takes out that previous high again, that was a total of 851 days. So we're talking about almost 3 years from when it topped right here to when it took out that top again. So for me, that's dead money. This thing topped out in February of 2021. So sure, you want to be involved in this thing until February of 2024 while it just goes sideways and tries to get back up to $690. By all means, that is not how I trade / invest. There's definitely some potential here for a, mid to long-term play, but I'm not seeing it right now. I would much rather just stay involved for a little short and see how that works out. Short-term play, not short, like to the downside. Diddy getting a nice bounce right here. Not a ton of chart history, but if we keep showing strength, I expect it to come back up to 1066. Looks decent. Back above the movie averages. Kanzan has broken through that support / resistance line. Again, this is where it topped out last time. We are getting a hard buy signal. We did see, decent little trend to the upside here. So again, there's definitely potential for this thing to run back up to like 42 or so. But I'm just seeing a lot of better looking charts than this one. And naturally it's just, I'm biased against China right now just because Chinese stock market, it's not like Chinese people. Just because how they look terrible. And the economy's bad, and, the numbers that we're seeing are bad, let alone the actual numbers. NEO, probably the strongest of all these Chinese stocks, but now well below the 200 simple moving average. We are below the 200 exponential moving average, and they both have sloped to the downside. We got to push back up at a rejection. We're getting a hard buy signal and some green histograms. Target to the upside, $45. Target to the downside, probably like $32. So just not interested right now. EDU. This one got hit really hard with the regulations. It's definitely showing some strength here. We see the buy, sell, buy, divergence signal, left the bearish control zone, bunch of green histograms in a row, well above our blue slope line here. We have already gotten, it looked better earlier, but it was already up 16%. Now it's only up like 8%. But our potential target, just to come back up and fill the gap, 163% move to the upside for a $5.75 target. Looks pretty good. Potentially. I don't know why. Do I have two of the same trade set up here? I think initially I was going to have one target to the initial fib level. Yeah. Okay. So 44% to the upside, or potentially, coming back up here, 121% to the upside, or if we fill the gap, 169% to the upside. With the 10% stop loss on this, or even potentially as high as like 25%, I'd be buying into that. But if it took out the low, I wouldn't be interested. The risk reward on this is ridiculous. 4-to-1 and 5-to-1 risk reward. So, and that's with the 25% ridiculous stop loss. There's a lot of potential here. Still looks terrible. I think that this was probably an overreaction, as this is like basically like education / tutoring, whatever. and like the whole equity China crackdown situation. So Peloton just let loose as expected. I expect this to just continue getting crushed. I do expect like a stair step on the way down, but we're back down to those same levels again. I expect we will be back down at $81 soon after that, and then we'll have to see from there. Just stair stepping its way down. We're below 200 exponential, below the 200 simple, and now both have slopes to the downside. And just one more time, as a specific example, we will notice the 200 exponential on top, and then eventually the 200 simple takes over and goes to the top. We come back up, retest it, stay above it, fails, and then we start selling off. Very clear topping pattern, in my opinion. You could argue it's a head and shoulders. You could argue a bunch of different stuff, but very clear topping pattern to me. And we're seeing this over and over again throughout markets. Taiwan Semiconductors, same thing. 200 simple above it now. We found support perfectly at our 107 mark. Got a nice little like 15% move to the upside, but there's a ton of resistance to this area. Fundamentally, not good. Taiwan, unfortunately, in a rough spot right now. And then obviously the chart just looks like a giant descending triangle. And then obviously looks very toppy as well. So not really interested right now, although there is a slight scalp in play on this one still. We did leave a little gap up back here at 112, so I would not be surprised to see like a 6 or 7% pullback. Intel still looks absolutely terrible. 200 exponential and simple, well below them. 200 exponential has rolled over already. We have the triple bearish divergence in play on the monthly. Starting to pick up a little bit of steam down here. At the heartline, run into resistance. I really just expect this to roll over and continue to sell off. No interest in this at all because the weekly and monthly just look horrendous. Nvidia still looks strong. Running maybe a little sideways consolidation. I wouldn't be mad to see Nvidia come back down to like 210, retest a breakout, and then continuation to the upside. Still looks very strong. AMD, the old meme stock of semiconductors, looks decent. Finding some support through here. We'll have to see what happens. Hard buy signal, but we're getting a lot of mixed signals from this. Still above the 8 and 21, so still looks okay. I talked about the ARC stocks and how they were starting to pick up some strength here, and lo and behold, looks decent, but getting rejected at the 200 simple. I did expect us to find support here at the 200 exponential. Again, we see 200 exponential above and then rolls over. 200 simple lags behind it. We try to break above it once, fail. A second time for a lower high. Here we're getting rejected again. Looks like it wants to roll over to the downside. Looks very, very toppy to me. Very toppy. Basically just trying to hold on to the 821. If we come down to the 200, we're talking about like $75. Looks like we have bounced the stochastics here on the Jewel Thief, but very clearly still in a downtrend on the TJD TDMACD weekly chart. And then monthly still looks okay. We're hanging on to the 8 for now, but just a breakdown to the 21 is going to put us at like $100. Hard sell signal on the monthly. All red histograms, but one green. Looks very weak. Very weak. But short term, seeing a little upward action as expected and predicted and specifically mentioned. Even though I do bust Kathy Wood's chops pretty hard. ARKF, you know what? If these things start performing or keep performing, I might even let her off her knees for a minute. And maybe let her brush her teeth, clean herself up a little bit, hot shower before I start wrecking her again. ARKF, back here at resistance, having some trouble at that same level again. If we get above this 55, 75, maybe some potential for our final target of the 786. But again, looking pretty weak. Seeing some support here above the 200 simple, so that's a little better than her flagship fund. We did bounce the 200 exponential, but once again, as we see here, we are losing momentum. 200 simple has crossed below, or 200 exponential has crossed above. No, the other way around. 200 simple has crossed above the 200 exponential. So, looks very weak. Still potential though. Saving the 821 cross on the weekly. Near the bullish control zone. Still have momentum to the downside on the TJD, TDMACD, and the monthly still looks decent. This looks like we got through a tough little resistance area. Potentially monthly is talking about $57. All red on the monthly and clearly downtrend on the monthly. So probably not all-time highs anytime soon, just based off of that. So Okay, skills, beautiful move to the upside, exactly to our target, took profits, and then it just immediately got wrecked. It literally just gapped up like 30% from our entry down here. Absolutely phenomenal. Buy, sell, buy, divergent signal, bottom of the range, showing some very, very clear buy signals. Seeing some momentum cross above the slope line here off of the perfect entry point. And again, that was a 2.63% risk reward ratio and a quick 30% move straight up to a tough, tough resistance. Could be very hard to get up after that through that resistance. If it does, we could easily see it play out at like 16.65 or potentially as high as $20. But skills chart looks absolutely horrendous to me still. But you can't hate on that great of an entry and that quick of a move for 30%. Cha-ching! Teledoc. Teledoc starting to gain a little strength right here. Again, 200 exponential and simple rolled over. Again, this was the 200 simple above the 200 exponential, and then they started rolling over to the downside. After that, we saw a powerful move. This thing still looks very weak. Not seeing the same kind of strength. We could easily see, though, man, I'm not going to lie, this thing is starting to look juicy for a bounce. We could very easily see like a lower high bounce back up here. Man. I mean, if it took out this low back here, I would be pretty skeptical on this move. So the trade setup's just not quite there right now. 1.83 to 1. I'd like to see at least a 2 to 1 risk reward ratio, but you could argue that's close enough if you wanted to bite, because in all reality, your target would be potentially as high as a 200 simple. So somewhere between 18 and 27% target to the upside could very easily just get rejected 10%, 12%. So again, the risk reward is probably not quite there for me. I'm seeing a lot of easier trades out in the market right now, but it looks like this is going to pull out some steam. So maybe I'll take a quick little small position on this. Palantir gaining some strength, still trying to get through that tough resistance right here. We'll have to see what happens. It is above 200 exponential and simple and maintaining slope. 820 of cross back to the upside. Looks like it wants to gain some momentum here. So it's got to be that gold buy. All of a sudden, everybody loves it because they bought gold. UBX, Unity, Biotechnology. Trying to carve out a bottom, in my opinion, here. We see some very clear divergence playing out. We have a very clear set of lows back here and a much higher set of lows here. Very clear set of lows through here and much lower lows here. Bullish divergence, leaving the bearish control zone. Hard buy signal. Got the initial pushback up. Retesting the 21. We closed at the 21. This thing looks like it could literally explode to the upside. All over Kathy Wood. Let's look at this trade setup right here because this looks juicy. 10.3% stop loss with a potential move up of 40%. 4 to 1 risk reward just for a retest of the 200 exponential and 200 simple is slightly above that. This could definitely play out. Again, 4 to 1 risk reward. We flip a coin, 50-50. If you're right, you get $4 from me. If I'm right, I get $1 from you. I'll take that trade all day, every day, especially closing at the 21. If we just consolidate here for a couple days, it's going to really look like it wants to burst to the upside, especially with all these green histograms. Look like they're about to cross over our red slope line, leaving the bearish control zone, hard buy signal, and a potential 821 cross to the upside for the retest of the 200 exponential and simple at 40%. Cha-ching! Corsair Gaming. Again, another one that just played out beautifully. Got into this at the perfect time right here at that consolidation range. 821 cross, hard buy signal, bunch of green histograms above the slope line. Boom, shot straight up. 15% move to the upside, at which point in time started very clearly losing strength. You guys know my strategy is get in, get out. Take profits early and often. You can leave some of those profits as an investment for a long-term swing position or a hold/investment, but the key is to get those gains and then get the fuck out. Front run the targets. This is very clear resistance all through this range for, since basically back in November of 2020, this was our support level. We broke down from it. We came back up, retested it. We could easily come back up a little further, but what did we do? We just shot up to the 200 exponential. Potentially could get up here as high as the 200 simple, but again, lot of overhead resistance and people selling into it, and two big, dirty, juicy red candles in a row. As far as I'm concerned, the trade has played out. We'll wait and see what happens in the future. I like Corsair Gaming. It helped me to build this awesome, awesome computer that I love, as did the group members. I'm very happy for each and every one of you. But at the same time, Sorry, Corsair. I'm out of here. Oh, and a few people have reached out to me recently. Oh, again, if you're just tuning in, sorry, I am extremely congested. And obviously, I'm sure you've noticed by now, but I'm trying to just push through the stream for you guys. A few people have reached out to me. Please don't reach out to me through TradingView. I have had issues with TradingView in the past with quote-unquote policy violations, communicating with people like outside of TradingView. I'm not supposed to give out my email or tell you to excuse me, to look at my YouTube channel or anything like that, because TradingView wants to make sure they get their cut of the money or they don't get liable for whatever kind of scams people are running on there or whatever. I've butted heads with TradingView a bunch of times. So, you know, while I'm using their service, while I'm providing all these indicators, including all the free ones I have out there, plus if you enter into the group, join the group, you get access to the newest one, the TJD Master, which is the one I've been displaying on my screen here. If you want to be in the group, let me know. I'm going to open up maybe 2 more spots. A few people have reached out to me. I kind of was vague or whatever. If you are one of those people, please contact me through my email at cryptotrendtrader@gmail.com. You can find that information specifically through the contact page of the YouTube channel. But again, I do not want to get I don't want to get that TradingView account, the one that you guys get all the free indicators through. I don't want to get that account in any trouble. I don't want it to get banned or anything, and then you guys lose access to all these different indicators, because the truth is I'm not going to go back through and republish them and do all their extra measures that they have created over the last few years. Not going to do it. So I do the absolute minimum I can on that account. Technically, by TradingView standards, one person is not even allowed to have 2 separate accounts. So my main TradingView account is separate, and then I have the Crypto Trend Trader TJDiesel or TJD account that I have published all these indicators on for free. I'm technically not even allowed to have my own account and that account, according to TradingView's rules, let alone have people contact me outside of TradingView, et cetera, et cetera, et cetera, et cetera. They have a billion gazillion rules and are just looking to violate you any chance they can get. So I don't take any chances. So please don't contact me through TradingView. If you are one of the people that have reached out to me, hit me up through email and I will open up a couple spots into the group. It is the beginning of the month. It is a paid group, but once you pay to get in, you get access to the TJD Master indicator for free forever. And then obviously you get to be part of the Discord community, interact with me all day through the day, and you get regular updates, trade setups, etc., all that good stuff. The group is a tight-knit community, very small group of cool people that I like and have handpicked. So if you suck, please don't waste my time. Next, we have Unity. Nice little 13% move here. We have already started the move up here to the 0.618. I do expect this potentially to have a little bit more of a burst to the upside. U ticker. This one may not play out. We'll see. There's a little gap back here as high as 147. We are above the 200 exponential and simple, and looks like we're starting to build up basically an ascending wedge trend to the upside. So if we just take our target of the ascending wedge, and we have obviously a pretty clear support line through this range right here. But if we just say that our ascending wedge trend line here, you know, obviously this is our little wedgie. And then if the underwear rips and gets pulled up to the upside, aka that's wedgie terms, you know, that would give us our little move up here, our little 13%er, our little bump back up to resistance right here. So obviously with a 6% stop loss in play, that is once again a 2-to-1 risk reward ratio. If you're not familiar with that, flip the coin. You get $2 if you're right. I get $1 if I'm right. Obviously, you want to take that trade all day, every day, baby. A couple more, and then we're going to take a quick break here. Zillow, the old Z, well below 200 exponential and simple. Both have a negative slope right now. Potentially could get that burst to the upside for 27% or a little lower back here to 112 with a 10% stop loss. So there's definitely some potential here. Even that's 15. It's not amazing, but overall, real estate's still strong, in my opinion. Zillow's got a decent little framework here. This could turn into a nice little trade long term, but I do suspect this probably has more downside potential. But again, you know, Zoom, exactly as expected. We specifically have been talking about Zoom and how terrible it's been looking. Remember, 200 simple, got on top here, started rolling over. Well above the 200 exponential. They both rolled over. Both have negative slope. We were under them for a little bit, and then boom, gap down, smash in your face. Zoom took a dumpy dump all over your face for 16%. If you were one of those suckers, those little sucker ass bitches that got zoomed on, got that ZZ skeet, hard buy signal, trying to exit the bearish control zone. But here we're just seeing more and more weakness. So I want to wait a little longer on this. Could we see a double bottom burst to the upside right here? I think it's more likely that, I mean, this trade setup's pretty great, pretty juicy. 7% stop loss, 17% to the upside, over 2-to-1 risk reward setup. If it breaks down below that previous low and the heart line right here, probably going to the bottom of the channel, at which point in time we'll re-enter at like 220 or something like that. But I mean, again, you know, so many just easy little trades get stopped out. Oh darn. You make a nice percentage to the upside, 2-to-1 risk reward ratio. Hooray. In, we're out. We're in, we're out. We're in, we're out. Skeet, skeet, boom. Not positionally trading, not hodling in these markets and getting stuck in trades upside down 40%, 50% for 6 months or a year. Speaking of 6 months to a year upside down or sideways, here we have Square. Square's 200 simple is above the 200 exponential. We're at the top of the range again. The same channel that Square has been trading inside of for since December of 2020. So do I expect it to just break out and go to the upside and just start mooning? No, I do not. I expect it to get rejected and come back down to the heart line or the bottom of the range. We're at the top of the range now. We're losing strength. We're losing strength. We're getting rejected. Probably just going to play back down to the downside. Same thing with PayPal. Been just going sideways, going sideways, going sideways. We're scalping from the bottom of the range, buying into momentum. We are not buying momentum at the top of the range after we've been range trading. Essentially entered into this range in December of 2020. It has gone sideways and just range traded this whole time. So do I want to be buying at the top of the range? No, not at all. This is a clear double top right here. So we're potentially just going to put in another lower high. We do have this nice trade setup in play. 9%, 4.79% stop loss, 2-to-1 risk reward ratio. So far looks decent, but could it just get rejected here and we're done? Yes, I think it's coming back up here to fill this gap and touch out at the 886 for a 9% move to the upside. Hard buy signal, leaving the bearish control zone. Bunch of green histograms in a row. Trade setup playing out. We'll see if it plays out all the way or whatever. The key to my trading strategy is buying into momentum, looking for a divergence, looking for a confluence, and also obviously getting in and getting out. But the key is to protect your principal. So if we can eliminate big losses using stop losses and just getting out of trades if they don't go our way, we eliminate those, and then our small losses and our small gains cancel each other out. Okay, and then what are we left with? Well, we got no big losses. We got no small losses and no small gains because they canceled each other out. So now what are we left with? Big fucking gains. Huge fucking gains. That's all I want is big gains, baby. Locking in profits, protecting principal, and making fucking gains. And if you're not about the gains, get the fuck out of here. No, seriously, you better stay because it's probably like 5 people watching this. So next we have eBay, obviously hitting our target finally here. I thought it was going to top out right here, but we're still creeping up. 20% to the upside. Entry, 5%. Obviously 4-to-1 risk reward. Perfect retest of the breakout of the ascending triangle. Triangle rather. Looking juicy. Snapchat still looks like it wants to just dump back down here. It looks like it's coming down to fill that gap. Try to push back up here again. Bearish candle come in. Looks like we're going to get that entry off the 200 exponential and simple back down here at like $60, at which point in time it pumps back up to where we're at right now, roughly this key resistance area. I think that's going to be a nice little like 7% stop loss, 22% to the upside. 3-to-1 risk reward ratio. Alternatively, you could take the short position down to close the gap right here. I would rather just buy support as this thing is overall strong. Apple, nice push up here. Looks like it may be potentially topping out. Finally got that play to the upside. Ascending channel burst. Came up here to like 156. Got a little bit of a move to go potentially, but looks rather toppy. Next we have Amazon. Nice little play here, 8% to the upside, like 5.7% stop loss down here if it took out that low. Basically bouncing the heart line, bouncing the 200 exponential and simple, loses strength at the top of the trend after going sideways in this channel for over a year. Looks very toppy right here. I expect this to top out, get rejected, and then trade back down to the bottom of the range, at which point in time I would look for an entry again. Facebook looks strong for a continuation. Alphabet looks strong for a continuation. Two of the best stocks in the market based on their chart. Facebook is obviously a piece of shit, like the company, not the actual chart. Looks good. Netflix, trading inside this range forever. Got a nice little burst to the upside. You guys know I have a trade set up in play. Target to the upside of $673. If we get continuation, I do want to see a consolidation retest and then continuation. Momentum still in its favor. Obviously looks very good after this long continuation consolidation pattern. But be careful because this is exactly what Amazon did. Broke out, came all the way back down, like 20-something%. So don't want to get stuck upside down in this Netflix trade and it goes sideways for like another year, or worse yet, even breaks out to the downside. So take a quick break. I'm going to clear back out here and we'll be back shortly for some continuation. All right. Kids, what's up, brother? Good evening, everyone. My son has bad allergies and found out vaping cleared it right up. Worked for his buddies as well. I will keep that in mind, my man. I do not personally have a vapey pen, as we like to refer to them, but maybe I could buy one or borrow one if it will help. Hopefully, this is just a one-day thing. We obviously have like that storm coming up from the south here, a little hurricane action. So I'm assuming it just brought some like allergens along the way with it. Hopefully this does not last. Sean CZ says, "What's up, gents? Love that snap short, gap down, cha-ching." Yeah, man. Snap definitely looks like it just wants to get wrecked on the way down. A big red candle would not surprise me. So make sure you smash up the like button. If you are just showing up, sorry about my allergies and stuffiness. And also remember, this is not financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research. Trade responsibly. Let's talk about that crypto. So crypto, Bitcoin futures, obviously just consolidating at the top of the range. Nothing crazy happening here. Hard sell at the top of the range. Bunch of red histograms. Maybe this is going to end up being a bullish consolidation. We really just got to wait and see as nothing has happened. We've just been going sideways for weeks at this point in time. On the daily chart, though, we are back on top of the 200 exponential for spot markets. 200 simple, rather. 200 exponential is still well below us. We need to be careful, though, because look at this chart right here. And remember, 200 exponential on top, strong trending move to the upside, continuation. Once the 200 simple crosses over the 200 exponential, what happens? We retest it, try to maintain it. Do we fail to maintain it and then go into a long downtrend for another year, and the 4-year cycle plays out? Or do we consolidate here long enough and then start pushing back to the upside? We are at a very clear resistance, trying to eat through those sell orders, trying to eat through all those sell orders. Had a nice daily candle here as it was looking very weak as we retested the 21 for the, we retested a couple times here, found support, came back to it, retested it here, found support, came back to it, retested it here, here. Don't want to keep coming back down to it. Do not want to keep testing the 21 as the 8 and 21 are just tightening up right here. And we're barely holding support at the 200 simple. Starting to lose that slope line, but we are back above it. So overall, still neutral. Still in a portion of my long position, but obviously took profits along the way at some of these key levels. We still have some very clear bearish divergence developing here. Remember, we had triple bearish divergence here and then dumped, triple bullish divergence here and then pumped, and now we're seeing triple bearish divergence again. Could easily come up here, put in a new all-time high. New little like mini cycle high, then break down from here. This is the key I'm paying attention to. All red histograms below the slope line. That is bearish. Hard sell signal, basically divergent signal coming out of the bearish control zone. That is bearish. This is bullish price action right here. At resistance, mixed signals. So I'm not ready to get like overly bullish as most people are right now. Just a little different outtake, different look. Again, a high, a lower high, a lower high, and obviously below the zero line, and the MACD is trending powerfully to the downside. A high, a higher high, a higher high. Triple bearish divergence taking place right here inside of this channel that we're very clearly interacting with. The heart line, the top of the channel. This one was a little underperformer. We just went sideways inside. Don't want to see this break down from the channel. If we do, we want to see like that 37,000 roughly hold. If we look at the stochastics, we have a top, a top, a top, a top, a top, and then trending downwards. That is essentially just another form of bearish divergence. As each time we had higher price action, but same peaks on our indicator or slightly lower. And then finally, that's stochastics rather. Then finally RSI, a top, a lower top, a lower top, and clearly trending to the downside. Triple bearish divergence playing out again. Could we easily push back up here to a new high and then it plays out? Could we easily validate that and just continue to the upside? Yep, any of those things is possible. But our top here was triple bearish divergence. Our bottom here was triple bullish divergence. So what's the likelihood this is going to be a lower high top with triple bearish divergence? To me, it seems very, 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 very likely. So ETH has just been going sideways forever. Today we got the burst. We were talking about this in the group before it happened, and I placed this trade setup in play here, specifically the ascending triangle off of our consolidation, and all it is just literally the measure move, which we already hit. We could easily see continuation. We could easily see that was it and we're done. But the fact of the matter is it played out beautifully and in like a day's time. But the initial move to the upside, the initial push up was, depending on how we're looking at it, I think I drew it on a 4-hour chart, so it was just slightly bigger. But it was a little something more like this, I think. Yeah, that looks more realistic. Because I'm pretty sure our target was... Yeah, our target was like literally at 30. I think I put 3,800, which we like basically hit perfectly. What was it? 38.48. So yeah, I mean, depending how you do it, measure it, where you measure it from. Some people like to do the measure of the pole leading into this. I don't know. That's a little too aggressive for me. I just like to do the meat of the actual pattern and then look for continuation. So we were able to make a nice quick little scalp on Ethereum for basically just to where we're at right now. Quick little 13%. Overall, looks pretty good. Hard buy signal. We bounced the slope line here and saw multiple green histograms after that consolidation. So that is obviously good as Ethereum has basically just been consolidating. And if we just flip over to the ETH Bitcoin chart, we will see we basically had a descending pattern right here. ETH to Bitcoin ratio, broke out of it, found support right here, crossed it back to the upside right here, and it looked like it was getting ready to burst to the upside. We're at resistance as where we would expect this to potentially top out the previous lower high. If we get above that, Ethereum is probably running or Bitcoin is just getting absolutely crushed. But it looks like this potentially has topped out as we have a very clear knife stab to the upside. So I do expect some kind of pullback here, which means either Bitcoin's going to go up or ETH is going to go down faster or something along those lines. You guys know how the relationship works. XRP, nice little move to the upside. Still looks weak, but better than most. Still above 200 exponential and simple at clear resistance. I don't expect a move to the upside, but if we get one, 1.57, $1.57. Solana obviously blew through our target of $100. Made it as high as 130. Obviously, taking some profits all the way. Looks like we have a hard resistance in play right here. How did I get the target? We had the 2.618 at 92. And if you're going to go to 92, might as well go to 100. And obviously, we overshot that. Got to be very careful in these markets right now because what we're seeing is one coin is like pumping. Solana was crushing it. Cardano was crushing it. Ethereum is crushing it. We're not seeing a bunch of things move all at once. We're seeing coordinated single coin moves. That's how markets top out. So we need to be very careful in these markets right now. Sell by sell, leaving the bullish control zone. Still strength on the daily, but this looks like it might be done or very close to done. Doggy Dogecoin at resistance. Broke down from it. Moved back up to it. Having a tough time here. If it breaks through this level, over 30 cents again, consolidates, we could easily see a pushback up to some of these other resistances at like 42 cents, but this thing has been tired. But it does look like a bullish reset maybe take place here, so I'm not counting Doggy Coin out just yet, but this meme crypto is all but dead in my opinion, as no one is really interested in it anymore. Even meme stocks are outperforming it. Basic attention token looks decent here. 821 still cross back to the upside at some clear resistance. Next target, $1. Do we get there? I don't know. I still have some positions open on all these shitcoins, and Bitcoin and Ethereum, obviously, and then obviously some scalps in play as well. So, Bitcoin dominance. This is a situation we talked about where if we take out this low right here, alts are going to run, and that's the top. That's the market cycle top. We saw it here, came down, found a higher low, moved up again, and then broke down, and that was our altcoin rallies at the end of the 4-year cycle back in 2018, when Bitcoin just basically went sideways to down and alts just went roaring. So if we break down below this target right here, this low of 39.68%, which we're basically at right now, altcoins might just be about to rip. Maybe this double bottoms, altcoins dump, Bitcoin pumps. I don't know what's going to happen. We got to wait and see, but this is a situation where we really got to pay close attention to. Now, if Bitcoin puts in bullish divergence on the Bitcoin dominance chart, Bitcoin's probably going to shoot to the upside or to the downside, and alts are going to do an underperformance to the upside or an overperformance to the downside, aka get wrecked. We'll have to wait and see, though. Crypto cap looks like it's topping out here at that 2.2 range, 2.2 trillion. Hard buy at the top of the range. I do not like to see that. But, you know, again, we're not seeing the breadth of the crypto market. We're not seeing a bunch of stuff pumping here. We're seeing a bunch of lower highs with a couple higher highs. And yet here we are essentially retesting all-time highs in the market. So where is all this money at? It's all in a couple small places. Could we see these shitcoins just run and new highs on crypto cap, 3 trillion? Sure. But we don't have nearly the momentum off this move right here as we did that took a year to build up. Cardinal beads. Looks like an ascending triangle at the top of the range at all-time highs. Sell, buy. Potentially another sell signal here coming. Bunch of red histograms at the top of the range. Could get another push to the upside, but again, one of the stronger cryptos. Don't want to be in that thing when Charles decides to dump on your head or the smart contracts fail or whatever the situation is. Matic. It's a little longer chart for you there, brother. Just going from the top to the bottom right here, we basically came up perfectly, retested the 618. Tough resistance to get through there. If we get another pushback up, $2.05. If we, well, potentially going to run into resistance at like 160 again. If we push down to the downside, I expect support at like $1.12. Overall, it does not look particularly great, but it is saving that 821 cross right here. So if we stay above it long enough, start seeing some strength come in, like 33% move to the upside still on the table for Matic. Litecoin looks absolutely terrible. Did not even touch a 200 simple. I mean, this is like total shitcoin. I mean, it's like almost as shitty as Dash and XRP. it at least like almost retested the all-time high here from 2017. But I mean, this thing about to just put in a double top and look like the silver chart. Like, damn, I'm ragging on that silver too. Come on, man, don't be so mean. Litecoin is a piece of shit. For the heads up, just in case you didn't get that. XRP also very, very shitty. Not putting in a new all-time high this cycle, but it's not over yet. It could still do it. Dash, definitely a total piece of shit. You would have to be an absolute moron to buy Dash. Maybe a scalp. But I mean, I would be looking to get out of that as quick as possible. It is literally one of the worst performing cryptos in this 4-year cycle. Absolutely horrendous. But maybe it puts in a new all-time high, and then I will take it back. I will BB to Dash, aka I will be cordial with Dash. Still a piece of shit though. In the meantime, and so is XRP. Still shitty for now, but I'm allowed to change my mind. You got to prove yourself, XRP and Dash. Uniswap looks okay. It's like topping out here again at same spot. Having some tough times getting through here. Looks like a little bit of a bullish reset though. Back at those same levels. Knife sticking up kind of powerfully here. Gaining a little bit of momentum. Hard buy signal. It really looks like it wants to push up. $36, another 20%. Okay, Udi. On top of the 200 simple, on top of the 200 exponential. Positive slope to the upside. Getting through that resistance. Looks like it wants to make a move. Chainlink, similar thing. Reset back here. Hard buy signal coming in. Really looks like it wants to retest this $35 level. Looks good for a retest 35. It really does. Back above 200 simple. It did roll over to the south, but we're back on top of it. I would say this got a like 12% or so move probably in the cards here. It could easily pull back down to like $28. I think we're looking at something like this. Find support somewhere around this level. Be a little bitch. There we go. Something like this. Looks like very high likelihood of playing out. Tight little 5% stop loss. You could even run a 10% with 21, 22% to the upside. Somewhere between a 2 to 4 to 1. This is a 4 to 1 setup right here. Looks pretty juicy on Lake. I will take that one. Sushi. At tough resistance. Seen a little bit of weakness here. Most of those other shitcoins we looked at have taken out that little peak from right before. Bunch of red histograms flipping over green. Trying to get back above slope line. Looks like a little bit of a bullish reset taking place here. Still way away from the cross to the upside. If it can get through this level at like 1465 though. Looks very likely to get up here to like 1750, something like that. Save the 821 cross. It looks okay. If it gets through 1475, I think it gets up to 1760. So there's like 20% on the table right here. If it breaks down below this low right here, though, I would be real worried. So while this doesn't look like the best trade setup to me, there's probably something here. But I'm assuming, since you asked me to look at this, you're already in it. Yeah, I mean, that's like 20% potential and downside for 30% upside. That's 1.5 to 1. It's really not worth it to me. But again, if you're already in it or whatever on this momentum, I would just dump out of it right now. But it's not financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research and trade responsibly. God, I hate not being able to breathe. I need a vapey pen. Somebody mail me a vape. We have vape shops everywhere. I could probably get one, but God knows what's in those things. Jeez. Oh, wait. Unless you're talking about the good stuff. Unless you're talking about that cannabis vape. I was thinking tobacco or just whatever that fruit juice is that they put in them. Riot. It's at that key resistance. Broke down from key resistance. Could not get back above it. It's trying. It's back on top of the 200 exponential and simple. I'd rather just be in Bitcoin than some mining stock shitcoin. MicroStrategy. I heard somebody talking the other day about how big Michael Saylor's balls are. And you got to remember, guys, it's all perspective, okay? Because if you put something really small next to something normal sized, it looks really big. Or if you put something really big next to something normal sized, it makes the other things look small. So before you say Michael Saylor has these huge balls, maybe he just has a micro penis and normal sized balls. So just remember that. While he's taking all these risks, what's he taking risks with? A shit company that still hasn't made new all-time highs since 2000. So let's just remember, on the grand scale of things, Michael Saylor and his micro penis are far from being like some epic bald like dude who just crushes it. This was the all-time high on MicroStrategy from 2000. Okay, and remember, it lost, just for reference points, I'm sure you guys have seen this plenty of times. Remember, MicroStrategy lost 99.88% of its value. Call it 100%. It went to zero. Remember that. Michael Saylor's company went to zero, and he got in trouble with the SEC because he's a lying piece of shit. And the only reason he didn't go to prison is because he paid them millions of dollars. Remember that. Michael Saylor is a scammer piece of shit. And then for 20 years after that, his company never even made a new all-time high and barely even recovered any of its value. Remember here, valued at $3,379, Michael Saylor, scammer. And then here, when he bought Bitcoin, it was still down. His company was still down right here when he bought into Bitcoin and started pumping Bitcoin in August 2020. Remember, 20 years later, his company was still down 96.72%. Michael Saylor and his little Michael Saylor penis, his little micro penis, he's a scammer piece of shit that got in trouble with the SEC. And the only reason his piece of shit garbage stock is worth anything right now is because he turned it into a Bitcoin ETF and ran a marketing campaign on Bitcoin. So before you get super pumped up and you try to get on Michael Saylor's balls, remember before you try to get on his dick that his balls are just average size and his dick is tiny. And that's why you think he has huge balls. It's all in perspective. And he's still so far off the all-time highs. His stock looks like XRP. It looks like Dash. It looks like silver, but dragged out over a 20-year period. This dude is a scammer piece of shit, okay? Scammer piece of shit, Michael Saylor. Just remember that, okay? But looking at the chart here, looks like it belongs to a scammer piece of shit. But if we look at a shorter time frame, it could easily push back up to maybe 860 or something like that. At which point in time, he probably like exits scams, says he got hacked, and steals all the Bitcoin, and then the company goes to zero or goes to prison from the SEC. Losing strength, and also, in case I didn't say it already, Michael Saylor is a scammer piece of shit little bitch. All right, cool. Oh, and let him know too on Twitter or whatever. Tweet at Michael Saylor, you're a bitch, or that you have a micro penis and your balls are just average. Anything like that's fine. Coinbase looks very weak here. Looks like it's just putting in another lower high. It could consolidate here and push up. Hard buy signal. A little bit of momentum. Target like 300, maybe a 10% move to the upside. After that, possibly 326. Just doesn't look great to me right now. I'd rather just be in crypto. And apparently they had a little problem where they like set out to like tens of thousands of people that your account settings were changed, your security settings. So I'm sure people thought their money got stolen, and they don't have like, a number you could call or like customer service. It was probably pretty scary. Robinhood looks very weak. Put in that macro high and now just, bleeding out as we expected, as we predicted, as we called, as I let you know, just bleeding out. And I expect it to continue bleeding out, probably back to its IPO price. Could have a pop before then, though. GameStop still on that push. Obviously, called the bottom perfectly here, and is still bullish off that 821 cross right here. Looks weak, though. Looks like it's having a tough time here at resistance. Could easily go to like 280 again, though. But, I mean, why invest in some piece of shit meme stock or trade some piece of shit meme stock or MicroStrategy or something when you could just buy an actual company that's still decent, that has a good trade setup, instead of some meme stock where you're just depending on diamond-handed little gorilla boys to help pump your bags. Speaking of that, AMC, the little AMC party still going on for now. Bearish engulfing candle right here. Doesn't look particularly good. Looks like it's getting ready to roll back over. Did see the green momentum cross back above the red slope line. Did not quite make it to my target down here, but very, very close. Obviously, found that clear support at $30. $30 is a spot to hold. If it breaks, it goes to 18. If it holds, I mean, I think it holds the next time we come back down to like $25, $30 anyway, just because of the moving averages. But AMC, obviously a piece of shit. Horrible, horrible company. I would literally rather buy Well, there's a lot of shitty stuff out there, but a lot of stuff I'd rather buy than AMC. Bed Bath & Beyond still looks very weak. Giant descending triangle. Barely hanging on to the 200 exponential and simple. It's like the meme stock with no followers. There's no cult behind that meme stock, so that's not good. Newegg looks weak. Cannot get above that resistance line at 1951. I mean, it is technically at 1952, so it technically is above it by a penny. So I don't want to lie to you guys, Michael Saylor style. But support at $17, resistance at 1951. If it breaks above there, could very easily see a pushback up to like $25. But remember, it got a hard rejection every time it's trying to get above this level. And if it breaks down from this level, expect it at $13 or $10.75 very soon. Careful there, guys. I mean, not you guys. None of you guys trade that garbage. There's probably a scalp in there somewhere, though. DraftKings staying above this clear resistance, busted out of the channel. Looks decent. One of Kathy Wood's that is actually doing well. Next target, 65. I mean, there's not really a trade there. The trade has already happened, obviously, but looks okay. All right. So, still can't breathe. Check. Just a reminder, this is not financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research. Trade responsibly. Gold chart next, and then we're going to talk about that little deal I had mentioned at the beginning of the stream about IRAs, Roth IRAs, and the power of the rule of 72 and compound investing. Gold still doing nothing. Just consolidated right here, slightly above the 200 exponential and simple. Just a clusterfuck of moving averages right here. Trying to pick up some momentum, but it has basically just gone back to the neutral zone and used up all its energy to get there. So to me, that is a bearish reset. Price action goes up slightly. We're still right back where we started. And we have used up all this momentum to the upside to get nowhere. Just back to where we started. We did see that bullish divergence off the bottom right here. And I think that has played out. We could easily push up a little higher, like 1830. If we get above that, maybe we come all the way back up to like 1915. But does not look likely. Gold looks like it is rolling over to me. Looks very, very weak here. This might reveal my chart. But again, just trying to say that 821 looks weak. Looks weak. And if we retest those 200 moving averages, we could be in trouble. Okay, so let's take a look at this, the difference between an IRA and a Roth IRA and how you basically get tricked, in my opinion. Why? All right, the idea behind a Roth IRA and an IRA, and I know you guys are international, and once again, this is not tax advice. Talk to a tax professional, talk to a CPA, talk to a lawyer, talk to whoever you want, but I'm not telling you what to do. I'm just putting some things in perspective for you. The idea of a Roth IRA is if you're making less money now than you're going to in the future, you can just go ahead and pay your taxes now, and then when you take that money out in the future, you don't have to pay any taxes. And then with the IRA, you put the money in now, tax-free, and then when you go to take it out when you're 65 or 7 or whatever, whenever you take it out, you pay the taxes then. But it's a trick, in my opinion. The idea being, if you're going to be in a higher tax bracket later in your life because you're going to be more established and you're going to be more rich and you're going to have more income, you're going to have to report more, so you're going to have to pay more. So why not just pay the taxes now and then not pay taxes in the future? But the way money compounds and everything, and the way that you want to live off of your principal without actually removing it, in my opinion, this doesn't really make sense. I would much rather have an IRA. Unless you're like making no money now, and you don't have to claim any, and you just have extra deductibles that you're just wishing you could write off, then maybe a Roth IRA works. But in my opinion, and what I'm going to show you, I don't think it does. So we have Roth IRA in green here. We have regular IRA in blue here. This is initial $50,000, and then each of these periods is a 9-year period. The reason I'm using a 9-year period is the rule of 72. The rule of 72 is very simple. If you're not familiar with it, it is a very, very important rule. And all it says is, all it says is, if you take 72, the number, obviously it's a number, and then you divide, or question mark, you divide 72 by the interest rate, by the interest rate percent, and then that equals how many years it's going to take you to double your money. Okay? So that's your rule of 72. Could probably make it bigger so you can actually see it. So if you're not familiar with it, that's it. It's 72 divided by the interest percent that you're gaining each year, and that tells you how many years you need to put your money in there to double. So if you have 72 and then you divide it by 7.2, which means you have a 7.2% per year interest compounded over 10-year period, that 7.2% is going to double your money every 10 years. So if you just make 7.2% fixed rate every year for every 10 years, your money doubles. So if you had $100, you put it in for 7.2% for 10 years, you go to take it out, you have $200 now. After 20 years, the first 10, your $100 turns into $200, and then your next 10, your $200 turns into $400. That's just how it works. Compounded interest, it's great. That's why you're supposed to invest when you're young and then keep investing steadily along the way. So in this case, we're using 8% interest rate. So we're averaging 8% per year for a long period of time, which is not unrealistic, assuming market conditions. S&P typically averages like 6 to 12%, depending on what time period, what not, etc. There's obviously inflation. You can subtract the inflation of whatever, 3%, 50%, if you're one of those conspiracy theorists that says we're in hyperinflation, whatever, okay? But just for the basics and to get a point across, these are the numbers we're using. So if we take 8%, we divide 72, because that's our rule of 72, divided by 8%. And it tells us every 9 years we double our money. So if we switch this to 9% every year, every 8 years we double our money, and vice versa. If we're making 72% a year, we double the money after a year, because it's compounded monthly, obviously, if that was the case. So, but all right. Anyway, so with the Roth IRA, we're going to take a 9-year period right here. Okay. So with a Roth IRA, you can put, or a regular IRA, one person with an IRA can put $6,000 in per year and get their regular benefits. So if you have $6,000 per year over a 9-year period, so this represents 9 years, that's going to tell you that your 6,000 times 9 years is $54,000. So just to keep it round, we're going to use $50,000, okay? And then in this case, we're going to use 25% interest rate just because it's easy, it's simple. 20% plus 5% state, or 18% plus 7% state, or whatever. We're just using 25% because it's an easy round number. Same reason we're using 50,000. So your numbers could be different. You might want to use 54,000. You might make 9% per year, etc. You could change it however you want. But to get the point across, this is what we're doing. So $50,000 Roth IRA, you're paying 25% taxes on that $50K right now over, that period of time. So you have $37,000 invested over that first 9 years. So the first 9 years you've invested $37,000. That 30, and obviously we're not doing everything crazy. I'm just trying to illustrate a point here. So that's $37,000 in the first 9-year period at, putting in $6,000 per year for 9 years would be technically 54, but we're just saying 50, and then we're taking away 25% because you're paying your taxes up front. So you have $37,000 investment principal. With an IRA, you pay no taxes on it, so the $50,000 is still $50,000, okay? So after the first 9 years, going into our next box right here, at 8% interest, the $37,000 is worth another, it's doubled because of the rule of 72 in that 9-year period at 8% per year. So that $37,000 is now worth $74,000, plus over the next 9 years, we're going to put in another $37,000, which is $50,000 minus the 25%. So that's going to come out to $111,000 at the end of the next 9 years. We have $111,000, okay? With the IRA, you have $50,000 that you put in, and then you put another $50,000 over the 9-year period. Obviously, you know why. And then your $50,000 has doubled because of the rule of 72. So now you have $150,000. So you have $111,000 here. You have $150,000 here. So we can see how this is already starting to differ. Okay. Over the next 9-year period, we continue. We put in another $37,000 plus we have our 111,000. So at the end, the 111,000 has doubled to 222 because every 9 years it doubles at 8% interest. And then we put in the extra 37,000 over that 9-year period. So now we have 259,000. Congratulations, you're a quarter of a millionaire. Excellent. Definitely a nice milestone for people. That's great, 259,000. Well, what happened if we were in a regular IRA? Well, our 150 that we have, the 50 plus the doubling of that first 50, and then the next 9 years putting in another 50, we now have 150. And then over the next 9 years, that 150 doubles into 300, plus we contributed another 50,000. So now we have 350,000. So here we have 259,000 tax-free because we already paid it. Here we have 350,000 with taxes due when we remove the money. $100,000 difference almost, okay? Well, what do people do when they retire? They live off of the principal, off the interest of the principal, hopefully not removing the interest. So would you rather have $259,000 worth of principal that you're making interest on, or would you rather have $350,000 worth of interest you're making? And remember, this is the exact same contribution, just the difference between using a Roth IRA and a regular IRA. Okay, so over the next 9-year period, we continue to make 8% per year because of the rule of 72. It doubles after another 9 years. So great, we're in. This is the initial 9 contribution, the next 9 contribution, the next 9 contribution, next 9 contribution. You're 36 years in. So if you started at 20 and you do this right now, you're 56 right now. So you still can't take your money out. If you started at 30, you are 36 years in right now. You're 66. You can now start removing money from your IRA, etc. So at the end of that period, you have your 259,000 that has doubled because of the rule of 72, plus you have contributed another 50,000. So now you're up to 555,000. That's great. Congratulations. You're a half of a millionaire. Plus you got some chump change you can spend on top of that. Good job. That's awesome. With the regular IRA though, your 350,000 over that next 9-year period has doubled to 700,000. Plus you have contributed another 50,000. So now you have $750,000 compared to your $555,000. If you take this out though, you have to pay taxes on it. This is already tax free, but we're not going to take that out. You're not just going to pull that money out and just go to Vegas. You're not just going to pull that money out and start living off of it. No, you leave that money invested and you live off of the interest, or you borrow against that. You borrow against your stocks and then you live off of the borrowed money, or, etc. That's like the way people live now. So do you want to have 555,000 or do you want to have 750,000? 750, obviously. So over the next 9-year period, obviously, we continue to contribute to our Roth IRA at $50,000 over that period. Technically 54,000 over the 9 years, 6,000 per year times 9 years, 54,000. We're just rounding it to 50,000. So over that time, also our 555,000 at 8% interest over 9 years has doubled again. So now we have the 555,000 doubled. Plus we have another 50,000 that we contributed during that period. So now we have 1,147,000. Can we get a little golf clap? You are now officially a millionaire in your Roth IRA. You did it. You're worth $1 million. You can now retire. You have been invested at this point in time for 9, 18, 27, 36, and another 9 on top of that. 45 years. If you were 20, you're 65 years old and you're a millionaire just because you put away $6,000 a year. You did not have a 401k. You did not do anything crazy. You just made 8% a year and consistently contributed $6,000 per year, and you are a fucking millionaire. Congratulations. You did it. Okay. If you're 30, you're obviously like 70 something years ago, whatever, you're a millionaire. You can live off your interest now until you die. Or possibly even some of the principal. This is all interest free. Great job. Well, in the IRA, you had $750,000, and then that doubled over the next 9 years. So now you had $1,500,000, plus you contributed another $50,000. So now you have $1,550,000 that you have to pay taxes on if you just removed it and spent it right now. But at this point in time, you're probably ready to retire. Maybe you even retired back here. But assuming you're ready to retire right here, how much money are you going to live off of? $50,000 a year. So, your income now is $50,000. So if your income here was $50,000, you're in the same income bracket. So if your income here was $50,000, you're in the same income bracket. So what did you really do? You paid your taxes ahead of time, and now you only have $1,147,000 worth of capital, stocks, whatever. Here, you didn't pay your taxes yet, but you have $1,550,000 that you can just sit in the account and never pay taxes on, except for when you remove it to live off of it. So which one is better? Well, assuming that you're going to live off of, let's say 4%, which is what people always say, oh, if you can just live off 4%, you can live out the rest of your life. Da, da. Let's say whatever, 5%, okay? Whatever percent you want to use, it doesn't matter. Do you want to live off 5% of 1,147,000? Let's do some quick math here. $45,880 tax-free right here. But, obviously the principal is much lower. Or you can live off of your $1,550,000, which is $77,500. But you haven't paid your taxes on it. So you could take out every year you're making 8% interest. Every year you're getting $77,500 in interest off of this at 5%. So if you're still making 8% per year, you're actually still making 3%. So this number is just growing. If you decide you want to live off of 8%, you're just breaking even. Assuming you go up 8% per year, you're never touching the principal. If you stop investing altogether, or you have underperforming years or whatever, you're just not growing your principal and you're starting to dip into it if you're living off this number. But assuming that at this point in time you have retired and you're no longer contributing to it, and then you leave this principal alone and just live off of the 8% interest or 5% interest or 4%, whatever you decide you want to live off of, over the next 9 years of your life, which, keep in mind, this has only been 45 years. So if you were 20 at the beginning of this, it's 65 years later. So, what's going to happen over the next 9 years? You're probably going to live it up. You're only going to be 74 years old. So that's not that old. If you were 30, you're going to be 84 years old. That's, again, not that old. But we assume you're no longer making contributions, okay? So we still have the 8% interest over the next 9 years. You're making no additional contributions. The $1,147,000 is now worth $2,295,000. You're a quarter of a billionaire, basically. You can just live off of that for the rest of your life and then pass down $250,000 tax-free to your family. But by then they'll probably wealth tax it and all this stuff. So you might as well spend some. And your kid's probably ungrateful anyway because you're rich. So fuck them. We spend it all, buy a giant yacht, and then just crash it, and tell them they got to earn their own fortune. Whatever, that's fine. But the fact of the matter is, here you have $2,295,000. Here we say in the IRA, we did the same thing, $1,550,000, no more contributions over the next 9 years, still earning 8% interest per year. We now have $3,100,000, okay? So again, you want to live off of 4% or 5% or 6% or whatever it is of $3,100,000 with a tax penalty if you take that money out and go start spending it? Or do you want to live off of that same percentage of $2,295,000? So with the time value of money, with a modest 8% interest rate over time on your investment, and just making continual $6,000 per year max IRA contributions, not that hard to be a millionaire. Not that hard to live off that money. But the real question is, at what point in time is it better to have an IRA versus a Roth IRA? It sounds great that you don't have to pay taxes, but they take the money off the top at the beginning, and then you end up with so much less at the end versus not paying taxes on that amount anyway, which what do rich people do? They never pay taxes on anything anyway. And when they do take money out, they take out just enough that they're actually have deductions for everything. So when it's all said and done, are you really even paying the same amount of taxes, or do you figure out a way that you're paying less than your tax rate was back here when you're in the Roth IRA? And then God forbid somewhere along the Roth IRA, you end up by this time in your life or whatever, you're an executive in a company and you're making $250,000 a year or whatever. I mean, you can't even contribute to the Roth IRA without paying more taxes anyway. Not to mention, you're only supposed to make so much money a year to even be able to contribute or be eligible for a Roth IRA, et cetera, et cetera. Versus in the IRA, you could just have so much more. And this is contributing $6,000 with 8% per year over essentially your lifetime. As opposed to if you were making, it's not realistic to average 10% or 12% over a 50-year period. But if you have a small percentage of your, portfolio in gold and it goes parabolic, or crypto and it goes parabolic, or whatever, over a lifetime, it might not be that unrealistic to think that you could average out those percentages. And then early gains in your lifetime off like Bitcoin going to $250,000 or something like that versus late gains in your lifetime over Microsoft going up like 6%, going to average out because your principal just keeps getting compounded over time in the end. But the truth is, by the time you take into account dividends, by the time you take into account the fact that you're really not trying to use up your principal and that you're actually just living off of the interest, in the end here, you have $3,100,000 that you're not actually spending anyway. So you didn't get taxed on this $3,100,000. You're only really getting taxed when you take the money out. Versus here, you have $2,300,000, but you pay taxes on it. So you basically paid the equivalence of $800,000 in taxes for nothing. You paid the equivalence of $800,000 in taxes so that you could not take money out of this and get taxed on it. Which if you're retired at this point in time anyway and you have no other income and you're just living off your IRA, well, if you're just taking out $50,000 or maybe you're taking out $100,000 a year, how much money do you have to take out of this IRA to pay that $800,000 in taxes? Well, if you're at a 25% tax rate, that means you took out the whole $3 million. So the only way you end up paying $800,000 on the IRA is if you take out the entire principal here, which you could take out the entire principal here. That's completely fine. And you have the flexibility to do that because you already paid your taxes ahead of time. But what's the goal of saving up all this money? Not to pay taxes on it and not to use the principal, but to allow it to compound over time. So you're basically, in my opinion, with a Roth IRA, you're shooting yourself in the foot. You're assuming that in the future, you're going to be paying so much more exponentially taxes on every dollar you make that you're willing to completely cripple yourself by paying those taxes up front and having so much less to contribute to it. Not to mention if this is all in dividend paying stocks or, whatever the situation is, you're shooting yourself in the foot on top of that because this whole entire time you have a larger principal that's giving you dividend stocks as opposed to here. So even though you're not touching your actual principal along the way, here you have $111,000 and say you're making 2.5% dividends, you're missing out on the difference. Here you have $111,000, 2.5% dividends per year, roughly, versus $150,000, 2.5% dividends per year. So you're talking about what, $3,750 worth of dividends right here, versus like, less than $3,000. So you get another $750, compounded along the way here, etc. So by the time you start getting into these big numbers over here, when you're in the millions, 1.5 million versus 1.1 million, and all that dividend, appreciation and everything over time, it's exponentially more money. And in my opinion, you're better off with the IRA. I think a Roth IRA sounds good. It sounds good to pay your taxes up front cheap, and you assume there's going to be more taxes in the future, and it's definitely a possibility. But the truth is, you're paying all the taxes when what do rich people do? What do smart people do? They never actually pay their taxes on the principal because they never remove it. They just live off of the interest. So why pay your capital gains? Why pay your income tax? Why pay whatever on the entire principal and make less money over time, compounded, just so that you could assume that you're going to have less taxes later. And again, this is all with only a $6,000 contribution, technically less than that because I rounded it off. It's only with a $6,000 contribution and an 8% interest rate over time. And you could say all kinds of different things. Well, I'm going to put money in, 401k, and you can put even more than $6,000, exponentially more than that. You could say that you're putting other money away that you are paying taxes on and not getting the deduction of the IRA or Roth IRA. You could say that, you have all this other investments on top of this. This is literally just with $6,000 per year. And we're talking about after, this is our first 9 years, 18, 27, 36. So 45 years from right now, if you had no money in the bank and you just put away $6,000 per year and did what you did, 45 years later, you're a millionaire versus a 1.5 millionaire. Or 54 years later, I don't know how old my audience is. Maybe you'll be dead by then. Maybe your wife takes half along the way. Maybe you and your wife are happily married and each of you puts in $6,000 per year. I think you're allowed to put in $11,000. I believe it is. I can't remember what it is. So say you just double these numbers. Well, maybe you have 6,200 because you're happily married. Maybe you have 4,000. I'm sorry, 4,600,000. Whatever it is. But the fact of the matter is, why pay all these extra taxes? The Roth IRA seems so good because you pay it up front, but in my opinion, with time value of money and compounding and the fact that you never want to actually use up your principal, IRA makes more sense. So that's my argument. Remember, I am not your tax attorney. I am not your CPA. This is not financial advice. This is not tax advice. Don't listen to anything I say. I'm literally just telling you my argument and displaying this on time value of money. And then obviously the importance of actually saving along the way versus trying to save up all at once. So, well, there you have it. Whew, we made it through that bad boy. I see Bitcoin is doing a little pumpy pump, looking good over there. That's definitely good. Retesting those highs. Okay, looks like we're going to try to come up here and put in that high and put in our third drive of bearish divergence. Maybe we just go to new all-time highs, and I could be wrong, and we can just all go to $250,000 and be rich. That's even better. Let's keep going. So silver looks weak. It did not get that same push up that gold did. 200 exponential and simple are basically sloped to the downside and look weak here. Gold silver ratio obviously had a nice push to the upside, coming back down to retest those levels. I do expect this to push back up to like 80 or 82 or 90, somewhere around there before the big sell-off. Platinum looks very weak, consolidating at the lows. Miners are trying to put in some strength here. First Majestic, bullish divergence here. Bullish divergence. Pump it up here. Definitely a long trade in play here. I don't know if this is going to be the actual bottom, but 12 to 16% looks pretty juicy there. Definitely keeping my eye out on these bad boys. Still not a great trade setup, depending on what you're looking at. Maybe if you're running a little tighter, you get like a 2-to-1 out of it. Don't love it. Silver Juniors, SILJ. Again, bullish divergence. Blue slope line. Hard buy signal. Above the 821. Looks like it wants to get a pump back up here to like 15 bucks. Man, I'm going to cut this off soon. I really can't breathe. USAS broke down from that channel, retesting it, trying to push up here, buy, sell, buy, after some bullish, no bullish divergence, but buy, sell, buy. I mean, this could be that perfect entry for that massive, massive move. I mean, even if it doesn't go crazy and it just retests the top of the channel, that's 50%. If it comes all the way back up to resistance, 173%. I mean, you almost got to take a stab at this thing at this point in time, off the lows, but you know, be ready to lose it, I guess. Again, it's not financial advice. Pot stocks, try to bottom out here. Looks about the same low. I mean, no crazy divergence here. A little bit on the MACD. Starting to show some strength. Having a tough time here, but looks like it wants to shoot up to like 16 bucks. This is Tilray at 14, 13.50. Looks like it wants to go to 16. There's definitely a little potential there. Man, I think these things are starting to look good again. Oh, I already got a better one to play, I guess. God, that's wild. Man, forget how bad these things have been getting wrecked. Good thing we got out when we did, ladies and gentlemen. 28% to the upside. Looks pretty juicy. Definitely some potential there on Tilray. Aurora. Right here, getting the 821 cross and 28% to the upside, 13% to the downside if we take out that low. Over a 2-to-1, seeing some bullish divergence play out. Aurora looking good. Time to re-enter some pot stocks, maybe. Canopy growth still looks terrible, but bullish divergence. I mean, this thing could go to 22. We could probably see a 50% push up on Canopy. It still looks so bad, though. Uranium stocks got that move back up perfectly off the 200 exponential and simple all the way back to resistance. Got to see what they do here. They're definitely picking up some momentum. Could be setting up for all-time highs. URA, UEC did not get as low as we were hoping right here. Back above 200 exponential and simple, pushing up here. Definitely gained some momentum again. Looks decent for a push up to like $3. Nice little trade setup, 20%. Got to be careful with CCJ, though. This one is looking like it's potentially setting up for that giant head and shoulders. We're almost at the target up here for 20 bucks. Got that perfect bounce off of 16 bucks. Basically for a over 20% move to the upside from, I think it was right here, 19.4% move to the upside. Yeah, again, picking up momentum, but this thing could be topping out. And if it does, I'm really paying attention to this heart line down here, or neckline. URNM, North Shore Global Uranium Mining ETF. Got to get a shorter name. Perfect bounce off 200 exponential and simple. Back up here at resistance. I mean, they're all going to move together. Copper, rolling back over as expected. Nice little bounce to another lower high. Trying to gain a little momentum, but still looks weak. Lithium looks like might be topping out here. Lower high. Back down here pushing. It's trying, but definitely showing a little weakness. Could be a little upsides though. Hydrogen ETF HYDR. Nice little buy off the 1.5 or 1.618 here perfectly. Back to the top. I did not take this trade. There's just not enough meat on the bone. It's not worth tying up capital for this potential move. It's just too tight of a range. Looks like it's just going to put in another lower high, in my opinion, just because that's just what it's been doing. Something like that. So it's probably already there. Lobsters. If you're out here trading those lobsters, this move looks good. It's honestly giving me a little bit of that wood on that lumber futures. Again, triple bullish divergence after that massive sell-off. I mean, lumber got absolutely wrecked him, damn near killed him. 73% to the downside. Triple bullish divergence. Still well below 200 exponential and simple. 38% trade setup here. Maybe as high as 73%. I don't know. I think this could be an underperformer as there is wood stacked up everywhere. Caterpillar, very weak. Back down here at the 200 exponential and simple. Weak, pathetic bounce off the moving averages, and it's going to dump, in my opinion. Trying to pick up some momentum, though. Deer, a little bit stronger. Finding that clear little support, ascending support line here. Something like that. Trying to hang on. Starting to show some weakness, though, but getting bought up. Still looks okay. Got to really see what it does when it gets out here to like 360. AM, Antero Midstream Capital, that H2O, that waddah, that liquid. Looks okay. Gaining some strength. Bouncing that 200 exponential and simple. 821 cross. I think we're going to retest the highs here. Going to have a little trouble getting through like that $10 range. Nice round number and a bunch of resistance / support here. But if we do, probably new highs on this thing. We'll have to see, though. We'll see what this momentum looks like. Definitely looking a little bullish. CX, 7X, concrete play. Tight little range we're playing inside of here now. At this point in time, we're basically just going sideways. That's our support. Clear resistance up here at the top of the range. Basically just a sideways channel. We broke down from our ascending channel. I think at some point in time, we're going to be retested like 750 and the 200 exponential and simple get there. 200 simple rolling over top. Picking up a little momentum, but this thing looks like it wants to come down. 750. Upside target, $9. Looks like it wants to come down, though. Cleveland Cliffs, that iron ore miner, that steel, that metal. Still creeping up here. Looks okay. 821 about to cross to the downside. Hard sell, a bunch of red histograms. Looks like it wants to come back down to the bottom. 1881. Let's see what happens after that. Got that nice push up after the break to a new high, cycle high, which is good, but it looks like it's getting rejected here, so might finally hit our downside targets. Ford, trying to get down here to 200 exponential and simple. Looks like they're about to cross over the beginning signs of weakness after breaking down from our ascending channel here as well. Broke out of the top of the descending, broadening wedge. Came back down, retest, push up, getting rejected here. Looks a lot like what Zoom did. Careful, we don't want to see that gap down on Ford. Looks like there's some potential, though. Starting to pick up some steam, but it's not really going anywhere. GM looks even worse. Breakdown from our channel. Measure move not quite hit. Just about made it to the 236, but not quite. Looks like it wants to come down here. Below 200 exponential. Rolled over. 200 simple. Rolling over. Excuse me. $45 target or $41 target. Man, I can't wait to get out of here. Sorry, guys. I'm so stuffed up still. I need that vaping pen. Hasbro, retesting the highs. As far as I'm concerned, still just operating inside this channel until we don't. And it does not look like we're breaking out of this bad boy yet. I have no interest in being in this thing until it breaks above and then holds the 786 as support, at which point in time I would absolutely love to get involved in Hasbro. They're definitely doing some big things. There's definitely potential. I like that they raised their prices. It is what it is, but it's got to be done. Looks like it's getting ready to enter into a long-term trend. And this is one of those ones where when we look at that weekly, it reclaimed the 200 exponential and simple after that dump going back to like 2019 and then picking up steam here on the monthly, back above the slope line here. Multiple green histograms, bullish control zone, hard buy coming out of there, 821 across the upside. Hasbro looks like it wants to retest all-time highs, but it could take months to get there. This does not look like it's just going to pop up overnight. But with a 7% stop loss and 29% upside on Hasbro, potentially at that point in time looking at new all-time highs, this thing looks juicy, but I got to see the short time frames do something. I want to see a push up here. I want to see some strength. Works. Get rejected at that key area here. Looks like it wants to bust up here. This thing got absolutely crushed though, so there's definitely some potential back above the 200 exponential and simple here for a move to the upside. I want to get a trade set up off the lower levels here. I almost want this thing. Oh no, not this again. Got to tighten it up a little bit first. I want to see it come back down to the 200 exponential and simple or somewhere near there, and then potentially take like off the previous swing. 26% stop loss, but I mean, look how juicy that is. 151% if we just retest the 1.3 or the 382. I mean, you could argue that you just take it where it's at right now. And if we break down below, I mean, it's such a juicy trade right here. Or you just set it and forget it. 30% downside, 100% upside. I mean, I like it better off lower levels, but I'm just cheap. I just like those easy trades with high risk reward ratio because I don't care what I'm trading as long as the setup looks juicy. Any sphere, crushing it, crushing it. We see a bunch of volume on this bad boy coming in. I saw it made the list today. Basically found that perfect support off our level down here, 382, and it's almost doubled since then. And I do expect this thing to go absolutely parabolic. Oh no. Go absolutely parabolic off of $0, which is where it's at now, because it's like one of those micro strategy stocks. It was worth like $2,200. Now it's worth $6. This is like trading micro strategy right here. If this thing bursts through $9, starts hitting our next fib target, $27. I mean, this thing's got so many X's on the way up if it can break through these key levels. But as far as I'm concerned, we basically have a technical breakout playing out right now off of like this area right here. So that retest right there was a big juicy buy, and now I just expect this thing to run. We'll see though. Maybe it just runs up here and dies and it's done, but that's still another 50%. So nice juicy one. Nice and juicy. Where them thick boys at? Where that thick boy bike club? Come on now. Come on now, Weight Watchers. Come on, Weight Watchers. 32% upside, 7% downside. Come on, Weight Watchers, you can do it. Hard buy signal trying to come out of the bearish control zone. Bunch of green histograms in a row, but they're too thick. It's too heavy. Come on, Weight Watchers. Retest those 200 exponential and simples. We'll see what happens. Maybe it gets crushed. On to the next. On to the next. Walmart trade still in play here. The big boy one. But it looks like we may be coming back down to retest 200 exponential and simple at the 618. At which point in time, 3% to the upside, 1.5 to the downside, 2-to-1 risk-reward ratio. But is it even worth it with those percentages? No, probably not. Probably not. For that blue chip, that Wally Walmart, that wear your jammies to the store. C Limited, another one of those Kathy Wood plays. Again, coming off this entry right here, that was absolutely beautiful. With a 17% target to the upside for our ascending wedge and Fibonacci extension target with a 9% downside. Basically 2-to-1 risk-reward ratio. Nice and juicy. Still in play. Last but not least, AMAT Applied Materials. Again, ascending triangle. I expect it, like I said, come back down here, find some support around this range. Well, we did get back down to the bottom. Let's see if this 821 cross holds and then what's up, because there is definitely some potential. Oh, wrong tool. Definitely some potential for a move out of this area, to our measured move of, what would that give us? 33% upside, 12% downside, 3-to-1 risk reward ratio. Yeah, that one might actually go into play right there. We'll see. I feel like there's a group member who asked me to look at it, so I will discuss this further in the group if I'm going to take action. But it definitely looks juicy. And also, I'm assuming nobody makes it to the end of the stream because this is probably so freaking annoying listening to me right now. But if you are interested in the group, holler at me, as I will probably open it up for like 2 more people. Tight-knit community of just the bros. If you suck, please don't hit me up. If you do, you can hit me up at cryptotrendtrader@gmail.com. If you couldn't tell what I was saying because I'm so stuffed up, you can get my contact information on the YouTube channel by going all the way to the right on the tabs and clicking in there and then doing a CAPTCHA and confirming that you're not a robot, and then it will give you my email and you can message me, or you can just hit me up in the comments or whatever too. If you are interested in this indicator, the TJD Master, if you join the group for just a month and then quit, you get permanent access to the indicator. But I would rather you join the group and then continue to learn and contribute and be awesome, as we obviously do pretty well. You can see the trade setups that I give away here on the channel. Do a bunch in the actual group as well. And a lot of times it's just more about like the real-time data and notifications when I'm taking profits, when I'm jumping in on something or a particular trade setup. But the truth is, over time, I will probably give away less trade setups on the channel and just do them more in the group. But I do love helping out the community. I know there are hundreds of you that watch my videos every time that learn and make money. And if you do, all I ask from you is go ahead and smash up that like button, subscribe, tell your friends, tell your wife, tell your dog, whatever. I hope you are making that money, preserving your capital. I hope you are learning from all of these sessions and everything that we go through. Hopefully you enjoyed today's stream, regardless of how obnoxious I'm sure it was listening to my stupid ass congested voice this whole entire time. But there you have it, guys. Appreciate everybody that showed up today. I appreciate y'all watching, liking, subscribe. Most of all, appreciate the group members because you keep me motivated and make all this possible, because honestly, with how few subscribers I have, how small the channel is still after multiple years, and how many times I've made an absolutely beautiful call and all the perfect trade setups and great indicators and charts and all the stuff I've given away. I'm not going to lie, the group helps me stay motivated because you guys make me understand that people do appreciate all this. So with all the thousands and thousands and thousands of people that have downloaded my indicators for free and never made any contributions, I appreciate the group members for funding all this through your generous contributions. And obviously that is why I made the TJD Master, and I am in the middle of filming the new courses. Obviously not filming anything right now because it is so freaking obnoxious, but I have the outline already done up for the next 2 parts of the course. So those should be out sometime this week, hopefully, assuming these allergies go away. So, well, there you have it, guys. Appreciate y'all for showing up today. Hopefully you enjoyed the stream, even though I am obnoxiously stuffed up. Crypto Trend Trader with our Wednesday midweek market update. It is 9/1/2021. Someone please call 911, and I'm out of here. Not really, though. Don't call 911. Peace. And I'm out. Crypto Trend Trader, and I'm out of here.